And the trades are moving along right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Zimbabwe's top diamond miner cuts 400. We'll see oil prices up today as they hit the highest level in 3 weeks as investors eye further U.S. sanctions on Russia. Plus, Bitcoin hits a record high over $122,000 in Asia trade today, buoyed by optimism of a growing institutional adoption. It's good to have you join us. I'm Ladi Williams. And talking about prices at this point, let's get a check on what's happening with oil markets. Again, following from early trade today, we're seeing oil there at the highest level in 3 weeks. Still a big move up, 1.44% this afternoon, $71.37 a barrel. Earlier this morning there, we saw Brent trading about $70, but we're seeing a convincing move up to start the week. WTI crude, though, still below that $70 psychological level, but really close, $69.49 a barrel, big 1.52% advance also, and definitely investors watching a lot of things playing out right there in the market, from geopolitics and sanctions on Russia there. How's all of that impacting global supply for oil going forward? So we're seeing the reactions there to prices, and definitely China there, the big oil importer. Is there going to be any impact to their oil imports? We'll definitely find out as we go on. To the metals market now for safe haven demand. We're still seeing gold there also trying to join the rally we're seeing with most markets there. 0.54% up for spot gold. And the U.S. gold futures, that's also up 0.54%, staying above that $300 level of the $3,000 level. Spot silver shining more than gold there, $39.44. I guess we're now looking at $40 per ounce there for spot silver. Platinum is the lone lagger there, 1.32% down, $1,450 per ounce. And palladium, a big 1.54, the biggest mover up there at $1,302. All right, to other matters now. We see the trade relations between Nigeria and the United States has suffered a significant setback in the last 5 months, as report shows that American imports of Nigerian goods, that fell sharply by $527 million to $2.12 billion between January and May of this year. The official data from the U.S. Census Bureau and the Bureau of Economic Analysis indicates that the figure represents a nearly 20% year-on-year decline when compared to $2.65 billion recorded in the previous year. And also, we see the Federal Inland Revenue Service is set to host a 2-day national conference on illicit financial flows as part of renewed efforts to combat tax evasion and safeguard Nigeria's financial system. In a statement released by the Special Advisor on Media to the FIRS chairman, said the conference will hold from July the 22nd to the 23rd at the Transcorp Hilton Hotel in Abuja. The theme, combating illicit financial flows, strengthening Nigeria's domestic resource mobilization. The event is expected to draw policymakers, tax administrators, law enforcement agencies, anti-corruption bodies, financial experts, and international stakeholders to discuss practical solutions to tackle IFFs and improve revenue collection there. And earlier, I had a chat, definitely, as Nigeria mourns former President Muhammadu Buhari. We did touch on his economic legacy and impact to Nigeria's stock market. I had that chat earlier on Business Morning with Mukhtar Mohammed. Take a listen.
Well, Mr. Sadwan, it came as a shock that former President Muhammadu Buhari is gone. But again, it's his legacy that we think about, the legacy that he left behind.
Right.
If I'm looking at President Muhammadu Buhari as a person, I think he was a man that had integrity, forthright, and a man of courage. If you are looking at President Buhari as a president, people will say he's the good, the bad, and the ugly. But we'll have to think of the good things that President Buhari did. But if you come into the to where I play the business space, It was a very turbulent time throughout the 8 years of President Buhari. But again, when you look at how he was able to deal with security, especially in the northeast, at the time when Boko Haram was running ravage, and when he came, he stabilized those points. That you could also add to part of what he brought to the business environment. He'll be well missed, especially for his humorous jokes sometimes. He came in a very turbulent times when he came. Remember when he came then, he was not ready to devalue the currency. We saw the market. He believed so much that the Nigerian currency was still strong. At that time, they wanted the currency to be like 250 exchange rate. He bluntly refused. And then at the end of the day, we're doing it at 360. It took the intervention of the then Vice President Yemi Osinbajo when President Buhari was on medical vacation to come in with the import-export market that drive that exchange rate from a high about 500 to about 370. If you look at the stock market in terms of President Buhari time, like I said, the stock market relatively did not enjoy so much of the kind of numbers we see these days when President Buhari was there. But that was due to the fact that he was a Pan-Africanist. He believes that African problems should be solved by Africans. And he also thinks he has to protect the Nigerian currency in spite of whatever was maybe international phase of the currency was not as good as he thought it would be. So that had an effect on Nigeria, especially into foreign direct investment, foreign portfolio investment. Were not very good during his tenure. They came as low. But in terms of some things he did during his tenure to help the stock market, I think it was in the area of the Security and Exchange Commission, bringing in some stability in that space, because at the time he came in, there were crises in the Security and Exchange Commission, bringing stability into that space. But in terms of companies also, we can't take him away that President Buhari was the one that commissioned Dangote refinery.
Right.
So definitely that add to his achievement.
Yes, definitely we'll carry on checking on the past president's legacies right there for Nigerian economy as the show goes on. But right now we'll just pivot to the impact and what to expect. That's for commercial banking in Africa. On the back of the Africa Unlocked 2025, where we saw leaders from politics, trade, finance, and innovation, they convened in Cape Town under the banner Business Shaping Africa's Tomorrow. And it was clear the conversation must evolve beyond the conference floor as global dynamics, AI, trade realignment, infrastructure gaps take center stage. Business and commercial banking stands at a pivotal junction, and now is the time to ask what tangible actions will the BCB leaders take to support SME growth, regional adaptation to digital transformation and inclusive representation. That's across Africa. Well, joining us to unpack this, we have Andrew Mashanda, as the head BCB, Africa Regions and Offshore Standard Bank Group, joining me via Zoom. Great to have you on the show.
Thank you very much for having me.
All right, so reflecting on, the Africa Unlocked 2025 conference, what were your biggest insights or, surprises, from the conversations, across the 3 days?
I think firstly, on behalf of the Standard Bank Group, we would like to express our very sincere condolences to the people of Nigeria for the loss of the former President Buhari. We pray that Nigeria finds peace and understanding during this period. Coming back to the Africa Unlocked conference, I think the timing of the conference couldn't have been better for us. As you are well aware, G20 belongs to Africa this year. The chairmanship is sitting with South Africa on behalf of the whole continent. And the B20, which is a business forum as part of the G20, is actually chaired by the Standard Bank. And we are also proud sponsors of that effort. So the key takeaways coming out of that is, given the geopolitical and the global sort of trade wars that we're seeing, the need for Africa to be interdependent and build our own value chains and create an environment where we can trade effectively with each other have never been more relevant. And the time for us to be able to achieve those objectives is now. We managed to get like-minded individuals together to be able to deliberate on these issues. But beyond just talking, to actually create networks and connections that translate into the creation of true value for our continent going forward.
And thank you so much there for just helping us understand, what's going on at this point for our country. And definitely, we do appreciate your condolences there. But from your perspective, what specific, commitments or initiatives do you think, business and commercial banking, what do you think they will pursue, post-event to support SME growth, across African regions?
I think some of the specific things that we can talk about is we had discussions that I certainly participated in where we had players in oil and gas in Nigeria, talking to players in oil and gas in Angola and some of the emerging oil and gas markets such as Mozambique and Uganda, talking about how some of the well-advanced sort of logistical technologies that are already in place in Nigeria and on the west coast of Africa, how they could create partnerships. So some of those discussions advanced quite significantly. We also saw manufacturers, particularly in the agro-processing industry, who are looking at expanding their operations across borders, sitting down and talking practically around how they can create partnerships to move these conversations forward into progress, into real tangible results coming out of that. So we're quite excited to see that these entities actually got to a point where they set afoot discussions and negotiations that will lead to actual deals being executed on the continent.
So in the light of discussions on, artificial intelligence, trade and innovation, what do you think banks, should do in supporting, regional clients to adapt and compete, in a digitized, multipolar global economy?
Yes, thank you very much for that question. I think we've recognized that. And if you look with our initiative in East Africa, borderless banking, we have started to recognize that the cross-border trade within East Africa is actually driving GDP growth for the economies there. We've also seen a large emergence of fintechs across Africa, 5,000 of them. And if we look at those 5,000 fintechs, 9 unicorns have come out of Africa. And of the top 9, 4 of them are coming out of Nigeria. So it does tell you of a picture that's emerging across Africa, particularly around the payment space, and how we as financial services organization can play a role in intermediating and providing payment systems for not only payments within borders, but across borders as well. So we do see that transition now that's taking place from traditional forms of payment, cash, electronic transfers, into more instant payments, which are account to account within geographies, but also account to account across borders. So we stand in the middle of these discussions around how we can facilitate cross-border trade through the payment systems that we develop and build for our customers.
And I know that the need for local narratives and, African solutions, that came through strongly, at the event. So, talk to me about how commercial banks, can ensure that Africa's regional businesses, their business voices, especially in the Francophone, Lusophone and underserved Anglophone markets. How do we make sure those voices are elevated?
We are fortunate in that we have a footprint that does cover Francophone and Lusophone and Anglophone markets. It was quite interesting sitting in again on a conversation taking place between one of our clients in Angola, who is looking at possibly opening up their business for opportunities in Namibia and in Botswana. Again, we are beginning to see, collaboration taking place between Anglophone, Francophone, and Lusophone. So we also had our Mauritian team in place, also exposing our clients to the opportunities that avail themselves through our offering in our offshore business, the ability for them to preserve their capital, to run their regional trade and importation centers out of an offshore center, run their holding companies out of a center such as Mauritius. We also have a presence in Isle of Man and in Jersey to give the same services to our clients. So we do recognize the need for us to increase collaboration between Anglophone, Lusophone, and Francophone countries. And our footprint lends itself quite uniquely to playing that role as facilitator and catalyst for growth within the markets that we play in.
All right, so looking ahead, what new, expanded or new or cross-border initiatives can we expect, from the African regions and offshore, in the next few months coming to end 2025, in the light of AFCFTA, and global trade realignment?
I think first and foremost, I think you'll see us play a much more prominent role in positioning our clients for growth. In other words, you'll see that the number of investments we will make through our businesses, our clients' businesses is into agribusiness. We'll see a lot more activity coming through into energy, infrastructure, and value addition in the manufacturing sector. And you'll see a lot more cross-border play coming through. And you'll see, I think, the development and the advancement of the borderless banking that I mentioned in East Africa to more digital platforms. We are looking at partnerships with other fintechs as well. And all of these efforts are aimed at just making sure that we play into the Africa Continental Free Trade Agreement. And also, you will see our involvement quite prominently in the discourse that will take around how we participate in the discussions around the tariff regimes across the continent, and some of the non-tariff barriers that are standing in the way of more effective cross-border trade. I mean, one last statistic on that, only 16% of the trade taking place in Africa is intra-Africa. So we have a long way to go.
All right, we'll definitely see how we can improve before we get to the next conference, and we'll see and gauge how much growth we've seen when it comes to intra-Africa trade. But thank you so much. It was great having you. I guess we all start with one step, and we'll finally get there as a continent at some point. That was Andrew Mashanda. He's the head BCB, Africa Regions and Offshore at Standard Bank Group. Thank you for coming on today.
Thank you very much for having me.
All right, we'll take a break now. When we come back, we get some data on what to expect so far under our former president. That's for economic and markets. We'll check out some of his footprints so far. That's in a moment. Just stay with us. All right, right about now, let's bring in Anite Edet with the details that was playing out with the markets. Great to have you, Anite.
Yeah, happy new week, Ladi.
Yeah.
First, I'll start. I normally do not start with asking questions,
Right.
but I'd like to ask you this question. What was Nigeria's stock market's all-share index level about 10 years ago?
10 years ago,
That's in May, to be precise.
35,000?
Yes, let me break it to you. It was 34,310.37. But currently, what is the level? The level is close to 127,000.
That is huge growth.
Exactly.
Who's grown that big in 10 years?
Exactly. A 10-year period, that shows you that first, Nigerian stock market is really a very strong market. And they normally call the stock markets around the world the barometer of any economy. And then at the same time, when you take a look at Nigeria's stock market, it used to be dominated by foreign portfolio investors, but right now it's the domestic investors, and they're doing pretty well.
Right, quite interesting. And, definitely a sad moment for us all, as even though we're seeing, rallies at this time, our former president there. But, it'd be good to, do some kind of throwback, to his
Okay, I think we have something on our screen here that let's just reflect a little bit. Just as we are mourning, it's called Nigeria's mourning the death of its former president who ruled. That's General Muhammadu Buhari, who ruled the country between May the 29th, 2015 to May the 23rd, 2023. So, but these are some of the key economic highlights that we have here. We call it, you might call it the Buhari's 8-year economic impact, the good, the not so good, and the bad. Now, you talk about the bad first, which is that Nigeria experienced about 2 recessions. That's between 2016 and 2020. And of course, it's not because Buhari caused it. It's because there was a global price crash in oil prices, which was in 2016. But then the country quickly recovered in the first part of 2027. And then not too long after that, the country fell back into recession, which was also short-lived. That's no thanks to the impacts of the COVID-19 pandemic. So that's part of the bad. But in terms of when you look at the good, which we just mentioned, under him, within this 8-year period, when he took office in 2015, the market gained 52%, coming up from 34,310.37. And he left it, that's under the Buharinomics. We're talking about Tinubunomics, or I don't know what name you want to call it, but the Buharinomics, the market, he left office, leaving the all-share index at 52,403 as at May 2023. And within that same period, we saw the market capitalization, that's the total value of stocks listed on the exchange, climbing from 16.9 trillion naira to about 52.2 trillion naira, all in the same level. But the one that is on the minds of Nigerians, which Nigerians are not very happy because of it, is the local currency. Was that the local currency lost about half of its value on the official window, which was down from 197 naira to the dollar to about 461 naira to the dollar, which is a 57% decline, although the president had always said, well, he was not in support of devaluing the currency, but so far the currency lost about 0.5%, and of course, we know what the currency is currently trading against the dollar, as well as other major global currencies around the world. Now, in terms of the GDP, which is another factor which is not too good, is that the GDP dropped all the way from $493 billion in May 2015 to, as you can see it here, $363.8 billion as at May 2023. Another not so good about the under his the highlights that we're looking at here is that the country's total public debt it grew from 42 trillion naira in 2015 to 77 trillion naira by sometime around 2023. So those are some of the good and not so good. But let's take a look at the other factors to consider under the Buhari under his 8 years of being the president of the country. He initiated the Social Investment Program, the SIPs, which is one of the key investment things to promote investment in the country. The Petroleum Industry Act, also under the Buhari administration. The Anchor Borrowers Program, which is for the farmers, as well as the Ease of Doing Business, which of course was aimed at improving the country's business environment. So these are actually the goods from what you might describe under the Buhari legacy. So quite a lot will definitely be missed within the business community as well as the economic community as far as all these are concerned. So these are just a snapshot which we in the business research department are putting out for the former president as we remember him, who's currently has arrived, his body has arrived the country.
Right, yeah, definitely. Quite a sad moment, for the country, and definitely a mixed bag for what we're seeing, definitely. And we are hoping, that the Nigerian economy actually, bounces, back to where we would like it to be, at this point. But we do share our condolences to the family of the former president.
Yeah. Well, but well, that's for the president. But the market, as we speak, is in the green. I mentioned earlier. If we can have that on the screen, let's take a look at how the market, the stock market, is performing right now. The all-share index about 1 hour ago was more than 0.5% at intraday trading numbers 126,863.95. If we see that record rally that we saw on the market as at July the 10th, I believe that should be on Thursday, the market gained about 2% and propelled all the way from 120 to 124 and then ending the week last week in that 126,000 index level. Can you beat that, Ladi?
Right, and you did say that was coming and it happened.
Yeah, exactly, we saw that.
Shiny crystal ball.
From the 120 to the 125, 2 back-to-back projections, right. And of course, 3 milestones, all in the month of July. Wow. So, Ladi, the market, Nigeria stock market, and let's just say it right now, it's official, Nigeria stock market is currently the best performing stock market from the tail end of the first half of 2025 into the first few weeks of the second half of the year, and is still doing quite well.
Right. all in the presence of high inflation, high interest rates,
and macroeconomic challenges,
tension, and tariff wars at this point.
And so many others. I think we'll have our analysts to talk more about the market because the market definitely this steroids on the market is expected to continue because at some point we're expecting the first half of the year corporate earnings result, the second quarter result, as well as some other factors. And of course, this number that you just might see, because at some point we were celebrating 40,000, 50,000, 100,000. Right now, even 120 is put in history. I'm looking at a 150,000 index level by the end of the year, and that would make Nigeria's stock market most likely to be #1 best performing stock market for 2025. That's fingers crossed.
Right, we'll keep track of that, definitely.
Okay. All right, so now let's get to talk about other markets. We've dwelt so much on the Nigerian stock market because home is where you have to begin. That's charity, your love for your home. And then, of course, making sure that investments, it's on our own way of saying investors can play into this market. If you don't know where to put your money and make some easy money, this is where you make your money from the stock market. But if you choose to go on the cross-border, this is how intraday market numbers are looking for on the Johannesburg Stock Exchange. The All Share Index there was down by 0.16% at intraday, 97,064.63. But of course, this market is still going into a positive territory. So far, we've had about other key markets which are best performing. We have the Kenyan stock market, we have the Malawi stock market, as well as the Morocco stock market. But talking about the Kenyan stock market, it's here it closed last week in the red, 0.75%, but has been able to climb all the way from being 90, 100 to about 159.06 as at the close of Friday's trading session, while Egyptian Stock Exchange All Share Index at intraday was up by 1.66%, 33,597.35. So that's a snapshot on the markets. Now let's talk about what to expect on the market before we bring in our guest, our analyst for the day. The stock market, what we're expecting tomorrow, first we're expecting that the National Bureau of Statistics is holding a briefing or engagement with some journalists. Actually, last week, the markets, the National Bureau of Statistics was expected to release the country's Q1 rebased GDP, which has been much expected, much anticipated, but we'll be having that discussion. Journalists will be meeting with some officials of the National Bureau of Statistics sometime around 2:30 p.m. local time. So they'll be engaging with the media on the reporting of the rebased Q1 2025 GDP report sometime just a few hours from now. And at the same time, the market is also eyeing the June inflation report due to be released by the National Bureau of Statistics tomorrow. Of course, that also has a way of affecting investment sentiment in the market. At the same time, investors are also positioning, we talked about the stock market, now the first half of the year and the second quarter of this year's, the corporate earnings result, is something that investors are keeping their eyes out, and that's, of course, we've seen one of them being the early birds there. That's Geregu Power has released its unaudited result for the second half of the year, for the second quarter of the year. And then at the same time, talking about the inflation, that's from the world's biggest economy, that's the US, the consumer price index report, as well as the producer price index report, will be released on the 15th and the 16th. That's the PPI will be released on the 16th, while the CPI will be released tomorrow, and all eyes are out for how the US economy turns out, particularly within the period where US President Donald Trump's tariff has been kicking in, and what impact it has had on most of the companies within and outside the US. Okay, so now let's take a side step and focus on the domestic stock market, as well as the current, the impact of the Buhari's legacy on the stock market. And we have Abiodun Adedotun, equity trader with First Securities Brokers, to give us more highlights on this. Thank you for joining us, Abiodun.
Thank you.
Okay, so I know I've done so much of talking, but I'll leave it to you, the trader at the equities market. Now, can you just give us just a key highlights? How do you think, what do you think the impact has been on the former president, Muhammadu Buhari? What was his impact, the Buharinomics? How did it impact the market until the last hours of his presidency?
Okay, yeah. First and foremost, condolence to the entire country, Nigeria, on the passing away of former President Muhammadu Buhari. Okay, the market is still up currently, and it's not surprising because the market has been on a roll at least for like a week now, and the most important thing is the direction of interest rates. Now, there's so much liquidity in the system, and of course, investors need to look for where to be able to pay, into the market. And interestingly, the market has also attracted a lot of retail investors in recent times. We've seen quite a number of speculative buying and things like that. So there is so much buzz around the market right now. And of course, wherever there is buzz, that's where money wants to, the direction of money wants to go. So it's not really impacted the market so far, but the market is still in the green zone.
Okay, so now you talked about the market being in the green zone, and I've seen here that just last week, the market's all-share index was up 4.26% in 5 positive trading sessions, while the equities cap has gained about 3.46 trillion naira, which is approximately, in percentage terms, 4.54%. Now, what could be the major driving force under this? Because earlier today we had that report that the PFAs, as well as some other factors. But what could be the major driving factor? Are investors moving from the fixed income market into the stock market? Can you explain this to us?
Yes, it's more like a trade-off. Investors are willing to take a risk. Everybody knows what inflation is looking like, even though you understand there's still a little bit of explaining that we're expecting the NBC to do in terms of the rebasing. Investors want to take a little bit of risk on capital to be able to get the returns, because if interest rate is on the decline right now, and we know that inflation is still persisting on the high levels, you just have to get out of your comfort zone to be able to demand alpha, and that's pretty much what investors have been doing. Now, in terms of the drivers, the key drivers of the market is actually been a mixed bag, but we've seen a lot of retail participation. That's why when you look at the price end of price list, you see that there are lots of companies that are gaining, a lot of speculative buying that is happening. Even in the penny stock regime, some which pretty much will be like, oh, we're not expecting a little bit of this, but there's been a lot of aggression. A lot of money is being thrown at stocks currently, especially the mid-sized and the perceived, small companies where retail investors can really, really be able to, influence proceedings. But that notwithstanding, you understand something major also happened last week. GTCO listed in London, the very first of its kind. It had this GDR on the more like the OTC board earlier. But, with the listing on the main board, it's more like, okay, a Nigerian company, aside the Seplat and maybe Oando that listed both in London and Johannesburg, respectively, going to London, especially it's one bank, and saying we want to play in this space. So, it sent a lot of positive signal, I was looking at it earlier. The cross rates for GTCO in London to Nigeria is more expensive in London, maybe around 125, and it's trading at 97 in Nigeria. So whether you like it or not, market tends to convert in terms of pricing, pretty much. So, for a Nigerian company to be able to take this bold step and try to break new barriers, it shows that there is a lot of confidence in what we are doing in some of these companies. And this market, all the market needs is just to continue to run on confidence. And that is here in abundance currently.
Okay, so that takes me to my final question with you. It's earnings season. It's first half of the year. One company has turned out its results for the period of that's the second quarter. So, what are your expectations for the markets as in terms of the corporate earnings, and then what do you expect the market to close Monday's trading session?
Yeah, of course, the company has always been a front runner in terms of earnings releases, right? And we are not surprised that they've led the way again. You understand, it's becoming a trend. Now, what we expect basically is that Nigeria is a lot cheaper right now um, on the aggregate level, right? And we expect companies to continue to, you understand, make decent margins of these low pricing, and of course, in nominal terms, you'll be paying a lot of naira to be able to get these goods and services. But in real terms, because of the battering we've had, the currency depreciation and a whole lot that has to do with inflation, we know where things are. So you'd expect companies to continue to do well. You expect the consumer goods to consolidate on the recovery they posted in Q1. All eyes is particularly on, telco giants, NTN, to continue to, dominate the space and get back to full recovery, you understand, of unprecedented losses posted in 2024. You expect the banks to continue to maintain very, very decent numbers. Interest rate just started falling like a few weeks ago. So before the impact really gets into their balance sheets, it's going to take a bit of time. I know one thing, as the saying says, when the interest rate is on the way up, the banks are always very, very quick to adjust your rates, for the lending side. But when it's on the way down, there's a lot of reluctance. So because they want to keep the margins very, very decent. So I expect them to continue to do well at the minimum Q3, if not till the end of the year, because it's already half year already. So you would expect investors to continue to maintain strong posture towards these sectors.
And I myself, I'm very, very keen on the markets. I'm not really an investor. I'm just a journalist, a financial markets journalist. But I'm very, very keen on the market, having a positive close for Monday's trading sessions. Thank you so much for your time on the show. Abiodun Adedotun, equities trader with First Securities Brokers, formerly known as FBN Quest.
Thank you.
Okay, so let's move over to Middle East. The Middle Eastern markets are all in the red, and this is as a result of investors' reaction to U.S. President Donald Trump's, we call him Mr. Tariff, because everything he's been saying has been mostly on tariffs, tariffs, tariffs. So over the weekend, he announced more tariffs on countries, which is expected to kick in on August the 1st. That's particularly companies within the Eurozone. But talking about the Middle East, they also have that a negative reaction to that report of more tariff threats from the U.S. president. The Dubai and the Abu Dhabi both in the red, 0.20 and 0.19% at intraday. And for the markets, two other markets on the Middle East, they're also in the red and poised to close the day in negative territory. Now we're talking about the U.S. market. Talking about the U.S. market, it's still also in the red ahead of the opening bell, 2:30 Nigerian time. The Dow Jones Industrial Average, S&P 500, and the NASDAQ all in the red, almost about the same margin here, 0.32%, 0.34%, and 0.29%. So this is also coming in the midst of earnings season, which is expected to come up later. The first among the ones to report the earnings will be JP Morgan Chase, which is set to deliver quarterly reports starting from Tuesday. And then another potential for investors to monitor is the ongoing rift between the U.S. President Donald Trump's administration and the Federal Reserves. And this is coming as the National Economic Council Director, Kevin Hassett, he mentioned to newsmen that the U.S. President can fire the Federal Reserve's Chairman, Jerome Powell, if there's a cause. So the markets are eyes out on that possibility What effect will it have on the markets in general, particularly the banks as well as the overall economy, and then the ripple effect that will have on markets across the world? Trump officials are probing the cost of renovation of the U.S. Federal Reserve's main building in Washington, while the president has repeatedly criticized Powell for not lowering the country's interest rate, which is expected to spur economic growth. So that's a snapshot for the market. But in terms of what the market is looking out for will be the PPI and the CPI tomorrow and PPI for Thursday. And we wrap up this segment with the Asian markets, which ended Monday's trading session mostly mixed. The Nikkei down 0.28%, down from the 40,000 level. The South Korea's Kospi down 0.83%. Hang Seng Index, that's on Hong Kong, 0.26% in the green, while the other two markets, that's the Shanghai and India's Nifty 50 in the red. Talking about the Nifty 50 is coming as in the red as the country's headline inflation based on the consumer price index was 2.10%. Lower year-on-year, as according to June, and this is a decrease from the amount recorded or the percentage points recorded in the month of April. So that's a 72 basis points. Food inflation, as well as some other indices, were all down, and that brought the India's index, the stock market index, in the red. But so far, the market is not really reacting positively to that 6-year low inflation rate on the country's economic indicator. So, Ladi, that's a snapshot for the market.
Right, and quite an interesting story there with President Trump and Fed Chair Jerome Powell. He's wanted him out for the longest time now. And I'm wondering if we get another Fed Chair, is he also going to want to cut rates?
He's always been critical, right from Trump.
Exactly. Well, how is the president sure that the next Fed chair would actually cut rates at this point? But it's still, central bank independence there. That conversation is still on at this point. How independent is the central bank?
My question is, who actually is U.S. President Donald Trump's good friend? Because on one side, you had the world's richest man, Elon Musk, who was on his side, sponsored his campaign. But right now, I don't know. I don't believe they're
not so charming right now.
Not so charming.
Right.
And he also, the criticism had begun sometime with the former Treasury Chair, Janet Yellen, and then continuing into Jerome Powell. And if he's out, if maybe that's if there's a cause for him to be removed, what would happen? Who will be the next, and how long will that continue until the end?
And how will the markets react to whatever happens there? Thank you so much, Anita. We'll keep tracking. So many questions to answer right there for the U.S. Fed Chair and the executive at this point. All right, let's flip over to Europe now. Let's get a check on Berlin for European markets. Great to have you. We have Chiponda Chimbelu right there to bring us up to speed. Hello, Chip.
Hi, Ladi. Nice to be back.
Yeah, great to have you, Chip. So how are European markets, how are they starting off this new trading week?
Well, Ladi, European shares are trading lower, and the Euro Stoxx 600 is down 0.3%, and Germany's DAX is even lower at around 0.8% today. Now, of course, that is, following that announcement last weekend by President Trump, who threatened the EU with a 30% blanket tariff on its exports to the United States. And of course, the EU wasn't the only target last week. The US president also warned of 50% tariffs on copper and Brazilian goods, and a potential 200% tariff on pharmaceutical products. Now, investors are, of course, still trying to digest all of that information. And of course, overall, all of them, many of them, in fact, are actually optimistic that the EU and the United States will be able to strike a trade deal, because, of course, experts have been warning of how tariffs could deal a blow to the global economy. But there is, of course, the hanging question whether this might actually go through, or it's just a negotiating tactic, Ladi.
So what has been the response from European leaders to that tariff announcement?
Well, Germany's Chancellor Friedrich Merz said that 30% tariffs would hurt German industry to the core. And he said that in a TV interview on Sunday. Now, the United States is the leading destination for Germany's exports. And of course, we have also heard from the European Union as well. European Commission President Ursula von der Leyen said that the bloc is ready to safeguard its economic interests and that it will continue working towards an agreement with the United States. Now, Brussels seems to be taking a more constructive approach. On Sunday, in fact, it announced that retaliatory tariffs against the United States, which were planned, are being delayed once again. Now, of course, the EU wasn't the only one that was hit by those warnings last week. There were also 23 other trade partners that have received those warnings of blanket tariffs. So we will have to wait until August 1st to see whether we have a deal between the EU and the US, and whether the US will, of course, follow through with its latest threat.
I guess at this point we can call it a deal or no deal going forward, but we'll keep waiting for that. But I know EU trade ministers are meeting today. What can be expected from them?
Well, the latest threat from President Trump is, of course, top of the agenda at that EU trade ministers meeting in Brussels. And while a retaliation is still on the table from the EU, it is rather tricky for the bloc to agree on what that should be. Now, during the trade negotiations between the European Union and the United States, there have been two camps emerge here in Europe. There's a group of countries that is pushing for a deal, and just about any deal to be made, and that is mostly export-driven economies like Germany with its car industry, and Ireland, which has a big pharmaceutical sector. And for those countries, this is really about predictability for their export industries. But there is, of course, the other camp, which says that the EU needs to fight back. And that one includes countries like France and Denmark. And it is anyone's guess which one will come out ahead, the pro-trade deal camp or the let's put up a fight camp. And that is, of course, because this trade conflict is more than just about trade. It is also about geopolitics. The European Union does need the United States on its side to help it support Ukraine defend itself against Russia. So balancing trade, the economy against geopolitical concerns, in particular security, is something that will continue to play a role in terms of how the EU proceeds in its negotiations with the United States.
All right, we'll keep tracking all of that. Thank you so much, Chip, for the details there and what's playing out in Europe.
Thanks, Laddie.
All right, to other stories now. See, the South African rand has kicked off the trading week softer as investors are mulling U.S. President Trump's latest tariff threats. Today, the rand traded around 17.96 against the dollar, about 0.1% weaker than the close on Friday. Trump on Saturday threatened to impose a 30% tariff on imports from two of the largest U.S. trading partners, that's the European Union and Mexico, beginning August 1st. So South Africa also faces the prospect of a 30% trade tariff on its exports to the United States, as well as an additional 10% levy because of its membership of the BRICS group of developing nations. And the Kenyan government's dollar reserves that hit about 1.45 trillion Kenyan shillings as the shilling remains bullish against the US dollar. Kenyan traders and importers will not face challenges related to dollar shortages anytime soon. And that's according to the Central Bank of Kenya reports there. We see the dollar reserve there increased for the second week in July 2025. And the CBK governor explained that the 11.2 billion Kenyan shillings, that's dollars actually, $11 billion recorded on July 10th, will support more than 4 months of importation. The foreign currency reserves increased from $11 billion reported in the last week of June 2025. According to the Central Bank of Kenya, the move is aimed at reducing pressure on the Kenyan shilling, which has remained stable for the last 6 months. I will see the Kenya Power and Lighting Company, they've outlined the tariff categories that determine monthly electricity bills, explaining recently the price variations that have sparked public debate in the country. And a notice shared on its social media, KPLC stated that consumers who keep their monthly electricity usage at 30 units or less enjoy a special subsidized rate. However, the utility firm faced criticism from Kenyans who accuse it of promoting low consumption instead of lowering overall electricity costs. Kia PLC clarified that consumers may now pay more for the same amount of tokens due to the tariff category they fall into, which based on their energy consumption pattern. So I guess we're having bands right there in Kenya. And we see Kenya's mobile subscription market recorded 6.7% growth in the first quarter of 2025, marking a strong rebound after months of stagnation. The sector added 5.38 million new active SIM cards, and that's according to the Communications Authority in Kenya. And we see Zimbabwe's biggest diamond miners cutting 400 jobs, weighed down by a global downturn in the market for natural gems. According to the ZCDC, prices are falling so dramatically that the company faces a stark choice, either to halt operations entirely or continue at a reduced scale with significantly fewer staff. Well, let's get a check on what's playing out there with other markets we track, and we see the euphoria right there in the crypto market is still quite high at this point, with the likes of Bitcoin hitting new highs, and most altcoins not really hitting new highs. XRP is still around that $2 range, and most of the big altcoins that we track, we see Ethereum there getting back above that $3,000 level, but it's not a new high, compared to what Bitcoin is doing at this time. Let's bring in Nova now. He's going to help us understand what's playing out. He's a co-convener for Decentralized Nigeria. Hello, Nova.
Hello, Lottie. How are you doing? Thanks for having me.
I'm good. It's good to have you, Nova. So much playing out in the market right now. We keep seeing new highs for Bitcoin. Did you see this coming?
It's expected. I mean, Bitcoin is a strong store of value. Of course, as how the market plays out, it's always going to come down and go up, come down and go up. But for all the doubters about Bitcoin and Web3 as a whole, the upward swing in the long run, in the long curve, is always going to go upward. So right now it's at 121,000 and it's strong. So any doubters, think of it of what Bitcoin was 10 years ago and the value it was, and it dipped. People were worried about it. The sky was going to fall. Oh my God, oh my God. And what happened? The Bitcoin just came rising right back up. Now look at it right now as 121,000. And plus Bitcoin ETFs last week pulled in inflows for asset management companies, I think a little bit over $1 billion last week. So Bitcoin is not going anywhere.
All right, and talking about not going anywhere, we know we have that crypto week that's starting today in the U.S. It's going to be a lot about talk about negotiations when it comes to cryptocurrency regulation. There's also talk about stable coins there. What are you seeing coming out from crypto week in the U.S.?
Well, Crypto Week is going to be strong, especially coming off the market as we see it with Bitcoin. They're just going to use that as a reason to push harder for regulation in the United States. There are about 3 bills right now that's being discussed with a variety of different senators. It's going to take some time to work out some of the issues, the kinks of what's happening with these bills. But I think if the senators stay strong as far as the United States kind of bringing it into the fold as far as its national wealth, I think these bills will pass. It's just going to take a little bit of haggling, and certain characters and individuals within United States politics are just going to have to be forward thinking and pass legislation that's going to be it's going to set up proper guardrails and proper operation for crypto companies. I see it coming. I always said, even though when Gary Gensler was the SEC chairman back then, that America will come around because they're not trying to miss out on being one of the leaders of this Web3 market that's kind of like sweeping across the globe.
Right, and talking about sweeping across the globe, definitely we're seeing the growth of Web3, in major economies at this point. But what are you seeing for the African continent when it comes to Web3?
For the African continent, it's a no-brainer. As I always said, the African continent has a variety of heaping amounts of wealth and resources that they have. And it's a matter of just tying in what Bitcoin and Web3 can mean and attaching it to those resources. And I think also the infrastructure is also there. It's these rising economies, these established societal, how should I say, systems that are taking place in Ghana and Nigeria and Kenya and South Africa. It's a no-brainer to kind of like attach these two things, these new technologies, what's happening in Africa right now. I think what's key that in particular what Nigeria should think about, and hopefully we can speak to as far as decentralized Nigeria with the public sector, is setting up some sort of a Bitcoin reserve. Bhutan is a small country right off the east side of India. It's a very small country. And right now they have about a little bit, say about $1.4 billion in Bitcoin reserve. And I think in ways where if there are any currencies that are actually trying to build or dig its way out of inflation, I think it's important that we can marry the benefits of what Web3 can mean, blockchain, into the traditional financial systems that have been existing for the last, say, let's say 100 years. And I think it could be beneficial for Nigeria and all other countries, African countries that are on the come up. There's so many ways that this can play out once you establish a proper infrastructure for Web3 and blockchain within each other's economies, African countries' economies, because you can kind of play the economies off of these different, say, economic vehicles where it can work towards a more strategic upswing of the country's currency at play right now. So I think if we strategize the proper way in these African countries, sit down at a round table, see what's in front of, say, the resources that are at play, and see how we can interlink these things within blockchain, we can kind of like spark off a new sort of economy that can bolster currencies in each respective country.
Right. We'll definitely keep checking the growth there of Web3 on the African continent. But thank you so much. It was great having you there. That was Nova Phoenix, the co-convener for Decentralized Nigeria. Thank you for coming on today.
Thank you.
All right, that's all we have. Definitely, we see the markets buzzing. We'll definitely keep you up to speed on what to expect this week with the markets, expecting some data that's for the on the Nigerian context there. Definitely, that's going to drive sentiment for the markets that we track here. Thank you for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.